Hey YouTube, this is Zach with Achilles Financial, and we are back looking at another video on what you should not be doing if you are day trading, if you are options trading, swing trading. We had a very volatile week this past week, following off of some of the highest gains over the course of a 50-day period that the stock market has ever seen. That being said, I saw a number of mistakes just looking at other YouTube channels, looking at other videos, or even the market in general, wondering, hey, how did we lose so much money in such a short period of time, and some of the ways that we can mitigate against that. With that being said, if you find this content helpful, please leave a like and subscribe. So I have it here on the screen is Starbucks stock SBUX. The reason that I've highlighted them is not only did they have news that came out this week, but they also followed the broader path of the trend line that we saw with the S&P 500. So again, following this week, we had another great day to start with on Monday, but I do want to highlight that we were following what was on last Thursday and Friday the highest returning days over a 2-day period of time. I think in the past it was like 40 years or so. Insane volatility. This is again the 1 month over a market indices right here. So that being said, when we look over the course of the past week, we saw a number of trends where people just started selling out of especially these high volatility stocks, or the ones that were gaining, think travel stocks. So you've got the hotel industry, you've got the gambling industry, you've got airlines in particular. And what I saw happen a lot is we had these institutions that were coming back on board, and then everyone just dumped them and they panic sold. So what was happening is rather than just hold the stock or hold in particular the option, what they were doing is trying to follow the trend. But instead of following the trend, they were buying low and selling lower. And then they were buying high and selling lower. And it just didn't make sense. And then they approached it, or people were approaching the market this week with the concept of, thank goodness I didn't lose more, as opposed to, hey, I'm glad that we didn't win. So if I'm looking at the portfolio over the past week, you saw that even in the volatility that we saw as it started, there were highs and lows. But what I wasn't doing, the reason that this was mitigated, is because I wasn't panic selling. Because if things shoot down, I wasn't worried because I had time on them. Even if you just look over here, most of these stocks or options were purchased with a long period of time on them, and I was just taking profits. So when we look at a company like Starbucks, I want to remind everyone that even if you purchased your options more than a week ago, due to the volatility, we've got very high premiums on these stocks. So this is just a 1 week volatility for Starbucks, which traditionally you're going to see this at about 250, not 290. But we've got this implied volatility here, which Robinhood does a good job of showcasing some implied volatility. It doesn't really do a great job of explaining how that is factored into the price. But just for simplicity purposes, the higher the volatility, the higher the expectation that the stock is going to move. And if the stock is going to move, then the sooner you're going to be in, quote unquote, in the money, or being able to make a profit with that call or put option. So that being said, whenever we have a stock like this, this is operating under the assumption that by the end of the week, the stock's going to jump up by $3. So it's going to be over or right at $80. And you can see just from the option chain right here that we've got some movements that have basically broken this. And that's by and large due to the fact that we had some after hours moves on Friday. So why do I highlight this information? So there were a lot of people who sold out on Wednesday of this week, that was June 10th. And what they ended up doing is then they would sell out to basically take a loss here, and then they would buy puts. And then when the stock started going up again on Friday, they sold out, but the options volatility, or the volatility, had increased. So the option was more expensive if they had just held on to it. So the reason that I say this is whenever we're looking at options, people look at the ones that are farther out and they say that's too expensive. So if I look at 78, or let's go up to that $80. If I look at $80, it's 142 compared to if I look at this week, that $80 premium is 57 cents. So a lot of new options traders will look at this and they say, I don't want to pay triple the price just to capture that 3 weeks in there. Why would I do that when I can make 3 or purchase 3 of them at 80 for this week? And I already know that Starbucks is a great company. They're going to shoot up, yada, yada, yada. And now I'm going to have I'm going to triple my money. Well, it's great in theory, but then what actually happens is if you have a week like this where, hey, the stock was at $83 and at its low point it ended up at $72, if you have any form of volatility, you're going to panic because that premium is going to drop down at a very quick rate. And then you're going to say, I don't like this. I don't want to lose money, and you're going to sell. And then, yay, you sold here, but then you look at it and say, thank goodness I didn't sell at this point. But then once it starts climbing back up, that momentum swing will cause the value of that stock to go up. So the main point of everything I'm saying here is look at the longer term. We are operating in a very volatile marketplace right now. So the ones I've been looking at, and you've seen this if you've been following the channel, I've been looking at July 17th for a lot of my trades. And look, I can get a $80 call for July 17th at $2.30 on Starbucks. And the reason that I like this is because this means that I have plenty of time and a lot of volatility for this stock. So if the stock were to go back to $83 anytime before July 17th, this would be in the money. And when we're looking at Starbucks, even though they have a lot of news coming out, I like my chances of it going up. Even if it gets to $80 within the next 2 weeks, it's most likely going to be favorable to me than if I purchased it this week and we had another down week. So that's just some of my advice, some of the ideas that I like here. It's okay to have a 80% gain on one share as opposed to a 40% loss on 3 shares for the same price. So keep that in mind. I like options trading. I'm having a lot of fun with it, particularly during this volatile time period. So make sure you're not panic selling. Buy the long-term options and take advantage of that. So thank you for taking a watch of this video. If you found the content helpful, please leave a like and subscribe. Thanks.